Well, hello everybody. This is Jeff Green from ProfitableInvesting.com. And as I record this, we've just wrapped up the final week of trading in 2017, and what a year 2017 was. We made some super profits this year. I'm not convinced that 2018 is going to be as easy, or if there might not be a pullback of some sorts even early in the year. So I'm going to jump through the market update for this week, and we'll talk a little bit about the charts and what I think might happen. So we'll go straight to the weekly market reviews tab on the website. Again, you can see at the top the weekly posture is still pretty strong. It's well into the green zone. The daily's looking kind of weak, and Friday's action didn't make me very happy. It plunged into the close by over 118 points on the Dow, so that was a fairly significant drop. But let's just go into the post and we'll walk through it. So some of the things I talked about in this week's market update is the market outlook for 2018. We'll talk about the weekly market timing indicator and the daily, and then we'll talk about a little bit about suggested market posture for the first week of trading in 2018 and a couple of stocks to watch. So let's jump right into the stock market outlook for 2018. I'm going to go into the market timing graphs here. And I want to show you something. We'll go straight down to the charts. And if you're familiar with the charts page, the top two rows of charts is really the broad market and the VTI on the top row. Let me turn these tips off here a minute. So we got these two charts is the broader market measured by the action in VTI. This is the weekly chart. You can see it goes back about 6 months. This is the daily chart. It goes about 30 days back. Right under that is a chart of the SPY, which is the purchasable ETF that sort of tries to mimic the SPX. You can't buy the SPX as an ETF by itself, but nevertheless, the SPY is a very useful proxy for the SPX index. So let's look at the broad market for a second. I'm going to take the closing price off, and then we can add that back and talk about it here in a bit. Like I mentioned, like the indicator shows you at the top of the page, the weekly is very strong. You can tell that by the border being green also. That's a quick look at whether it's weak or strong. You can see the 20-week moving average is still moving up, even though the on-balance volume, the 3-day moving average is certainly high. It doesn't look like it's going to turn around anytime soon. But what worries me here is the action on the daily market. You can see the 20-day moving average is moving down, and the 3-day moving average is not only below it, it's also moving down and making lower lows. So that's not a good indicator for strength that you want to see in the market. And the SPX, which is, as we all know, measuring the biggest companies available on the stock market. Let me turn the price off here. Again, the 20-week moving average is moving up smartly, with the 3-day still making new highs on the weekly. I think it's a little bit extended here, but we'll see what happens. On the daily basis, I'm kind of concerned about this like I was on the broader market. The 20-day moving average is moving down, and the 3-day moving average is not only below the 20, but it's also nearly making new lows. So like I talk about in the write-up, I think the SPX or the SPY could easily drop down to its first level of support here, somewhere between 2550 and 2600. I think that could easily happen in the first part of the year or in January trading. With any luck, it won't affect the weekly posture. Let me turn back on the SPY numbers here, and we can see where 2600 lines up on that. Well, maybe it's not going to come back. Hold on a second here. There it is. So you see, if on the daily, if it drops down to 2550 to 2600, that still doesn't really, the price still doesn't cross the 20-week moving average. So that drop to that level might not affect the daily. We'll have to wait and see. Let's go to the summary table, because I think that's a little bit insightful also. Let's go to the daily timing summary. And this only has the daily postures. This doesn't have the weeklies. So we can quickly at a glance see which sectors are strong. We talked about the broad market VTI and the SPY, very, very weak. They've been red. They came back yellow and green for a couple of days in mid-December, but then went straight back into the overwhelming supply posture here. You can see some of these other sectors are starting to weaken also. The consumer staples, which has been strong for a long, long time, got a little bit weaker. Energy and financial stayed the same. Starting to see some deterioration in the strength in the healthcare area, and these three are still green, but utilities went straight back into the red again. So you're starting to see deterioration creep into some different sectors. So I think the posture for this, for the first trading week in 2018, I think is cautious. Let me go back to the write-up here. And we'll talk a little bit about two of the stocks that I'm watching, that if the market does come back to a significant position of strength, then I might take on a couple of new positions this week. But I'm looking at Intel, symbol INTC, and TriNet Group, TNET. Let's take a look at those two charts. I got TNET already up here. I was just looking at that. You can see the demand for TNET is exceptionally strong, especially on the daily basis. The 20-day moving average is moving up, and the on balance volume is just moving smartly higher. It has gone through a period of consolidation at this price level, right around 43 to 45. Again, I was kind of disappointed on Friday because it did make what looks to be a new high here. I thought it was going to break out and go higher, but then it got pushed back at the close when the broader market got pushed down. So I do have an alert if it should go up above 45 and a quarter and something like that. I may be interested if the broader market is strengthening. We'll have to watch and see. Let's take a look at Intel here. Not so happy with this chart. So Intel, it jumped up from this level of support here, which was a good item. I was cautious here because I wasn't sure about the market in the latter part of 2017. It did gap up, did produce a new high, but since then it's got pushed down to this base a little bit. So we'll keep an eye on the momentum. The demand for the stock is not as strong as TNET, but it's not bad. Intel is a remarkably stable company. It makes money. It pays a good dividend yield. So that's the two stocks that are on my watch list for this week. So again, if the market broadens, if the market strengthens on a broad basis, I might consider positions in these stocks. We'd have to wait and see. But again, I advise caution this week to see what happens in 2018. I have a strong feeling we might get pushed back into a base, but unless that weakens the weekly posture, I think we'll be good to go. So hope you have a wonderful new year, and we'll talk to you later. Bye-bye.